90, whatever, 5% of all startups also go out of business over a time of 5 to 7 years. Crypto projects and crypto tokens do the same. The very, very big difference though is, since crypto projects have a token, it's visible.
Hi, so welcome back on Oleum. Today I'm joined with Christopher May. So hi, Christopher. Nice to have you with me.
Hi, thanks for having me.
So you are the founder of Finoa. Essentially, you are building infrastructure services for institutional investor or in the crypto world. I think, you are pushing something a bit beyond that now. So quite excited to dig into that world, which I don't know that well. For my little story, I did buy some crypto one day, but I did lose my key. I think that was one of your situation too. And that's it for me. So I lost my key, I lost my crypto. But really, to kickstart the chat, do you think you could essentially walk me through a bit of your genesis, like from, I think you came from like a small village in Germany, but then you spent a few years at McKinsey, and then obviously, you ended up like setting up Finoa with one of your friends. If you could essentially retrace and go back in time a little bit, it would be absolutely interesting for me to understand, what pushes someone to get into crypto.
Yeah, very happy, and thanks first of all again for having me. Really excited, pleasure to be here. As you said, right? So I grew up in a very small village in the west/southwest of Germany. So very rural place, a very calm place. I think what defined me all over my teenage years is that I used to be a professional table tennis player, or see my professional table tennis player in my youth. So I was competing on regional competitions, German competitions, but also like European wide. And I think like from the age of 11, let's say, got out of like the calm, small environment I grew up with, right? So and I think that journey, that period of my life taught me a lot of stuff if you want to survive, or let's say excel or thrive in the business world or in any profession, right? As you said, I worked at McKinsey. Actually, previously I did like a 2-year apprenticeship with a small private bank in Frankfurt, back in the day called BHF Bank. Nowadays it's part of the French Oddo Group, actually. And then after my university studies, went to McKinsey, spending in total 4 years there, and mainly working with banks and insurance companies. I think that's also the second important thing to know about me, is that, not since I can remember, but since my early adulthood years, I was always very interested in financial markets. I was a trader by myself in the stock market early on, traded like derivatives, all kind of different financial instruments. That's also like, since you asked, like, how did I get into crypto, how I first went into, or let's say, got acquainted with crypto. My first steps in the ecosystem were really, and that was around like 2016, early 2017, around investing. So my background is, I said, like, financial services. I studied business administration and then spent 4 years with McKinsey. So I'm not coming from a technical background. So I went into crypto from a financial aspect, from a trading kind of view, and very quickly though dived into what is this, what I'm dealing with there, right? So what's the technical background of crypto? What's also the societal impact of crypto, of decentralization? And the more I digged into the ecosystem, the more time I spent, the more money I invested personally, the more I also got fascinated what crypto, what blockchain technology, what decentralization means. And then during the MBA, which you said it like I built the company with a good friend of mine who also is a former McKinsey colleague of mine. And by coincidence, we ended up doing the MBA at the nearly the same time, but at the same university back in the day, i.e. in Madrid. And during that time, we basically said, okay, like we are so fascinated by what's happening in crypto, and let's just explore and let's see if there is something we want to build and something which is also worth exploring, right? So in that sense, it's not the typical founder story where you say like, okay, I want to be a founder no matter what I'm actually building.
Mm-hmm.
But it was more like a process where we said we are passionate about something, we see a problem. We also had like a kind of a risk-free environment, right? So we were still in the MBA. Technically, we were employed with McKinsey, or let's say we had the opportunity to easily go back. It was not like that we took a big risk and said, okay, we throw away our very well-paid jobs and start a new company. It was more like, okay, there is a problem. We have lots of passion about it. We have 1 year during the MBA to try this out. And it obviously didn't take like a year, but we very quickly figured out, okay, there is something, this is fun. We're also making progress, like our
Mm-hmm.
ideas, which we have, our vision resonates with other people, potentially also with investors. And then we quickly decided during the MBA that we start the company, do this full time, and also leave our McKinsey jobs.
Oh, it's interesting. I mean, we spoke to the founder of a company called Seed Legals, based in the UK. I mean, they've been in the ecosystem for quite a long time, 10 plus years, essentially automating a bunch of legal processes for startups. So he's seen like thousands of different companies. He was essentially saying like the only right excuse or reason to start a company if you identify a problem which you want to solve, not necessarily because you want to become an entrepreneur and you want to do something, because I mean you don't focus your attention on the right thing. But so coming back to the problem, I mean, what was the initial problem you've seen, like, which essentially pushed you to what was the first iteration, let's say, of Finoa?
Yeah, yeah, maybe like I mean, I was sharing previously already, right? So like Henrik, my co-founder, and myself, we invested quite a lot in crypto. And for those of you who know the ecosystem a little bit, 2017 was the year which was basically called like the ICO craziness year, right? So there were like new initial coin offerings, so the equivalent of an initial public offering, the IPO. Um, like we participated in lots of these. We traded a lot between the different cryptocurrencies, and I had quite a substantial portfolio in the terms of, let's say, breadth of different tokens, right? So going a little bit back, I was sharing before, like I did an apprenticeship, which I was mostly spending in the asset management and wealth management department of BHF Bank. And I think the other endeavor in my professional career would have been to work in asset management or for a hedge fund. That was also something which I considered early on in my career. And I literally tried to build like or rebuild what I have learned in the asset management space also into crypto. So I was literally having like Excel models where I was trying to figure out what's the correlation between the coins, which coins generate alpha in a bull market, in a bear market, et cetera, et cetera. And that led me, for example, to a portfolio of 80, 85 different tokens at most of the times. And if you go back, the infrastructure back in the day was not made for this, right? So I think Coinbase had back in the day 4 to 5 tokens which you were able to trade there. Binance, similar. So it was very difficult to manage a portfolio of 80 different tokens. And all the stories, all the problems which you might have read in the news about or which you have heard from friends, that people have been losing their private keys or their passwords to their private keys. That stuff really happened, and it happened around us, because just imagining like Coinbase has 4 to 5 tokens, Binance maybe 10, but you have 80 tokens. So what do you do with those tokens? So where do you store them, right? And me personally, I ended up having like I don't know the exact number, still not until today, but maybe 20, 25, 30 different accounts and wallets, etc., etc. And that was obviously not something which made asset management, like money management, possible. And I mean, you shared that you lost a private key. I know that I at least lost one private key out of like all the different wallets which I had. It
But
was luckily,
how much did you have on that key?
I think like at the highest point in time, and like I looked it up in 2021. I think it was 8,000 euros, which was then on there. So I mean, by now it's not worth that much, most probably, because it was not like a token which, let's say, was a very valuable, or which is still a very valuable token. But yeah, I mean, like these things really happened, and based out of that experience, we kind of said, okay, if we as retail, or let's say semi-professional investors have that problem, how shall institutional investors actually be able to enter the market? And that was like, I think, the first clear use case, the first problem which we said that to make crypto somewhat mainstream, and speaking from the retail side or from the institutional side, you need to have a platform which enables institutions to enter and access the space in a secure way, but also in a way which is somewhat relatable to what they know from the traditional financial world. And the very important word there is secure, because on the one hand side, you say like you need to secure like let's say, the technical security, right? And I mean, hacks are all over the news. They've been there like since crypto exists, starting with Mt. Gox, etc., etc. So one key problem which we needed to solve is like making sure that we can custody, that we can safeguard, secure the assets of our customers in a secure way, that they don't lose them. The other thing, of course, if we talk about secure or certainty, is that we provide them with a regulatory-like framework, which they also used from the traditional world. Looking back in the day, like, let's say, regulation around crypto was completely different than it is today. But I think from the birth of Finoa, we were pretty clear that if we want to move into that, let's say, institutional corporate aspect of crypto, of blockchain technology, we need to solve the security problem in the custody space, but we also need to go with it from a regulatory angle. And that's basically how we founded the company then in 2019, and fast forward build where we are today.
Okay, I understood. So what made you choose like B2B versus B2C? Because what you mentioned from the story was a personal problem, like friends, etc. So I mean, you could think, okay, we are going to build a solution for consumers. I mean, I don't know what was the split at the time in terms of volumes of traded tokens, etc. But was it because the volumes were more on the institutional side than on the consumer side, or?
I mean, back in the day, it was absolutely not the case, right? So I think we asked, being honest, we asked that question like multiple times in our lives, if that was the right decision to build B2B versus B2C, right? I think back in the day, the answer was, if you were taking a look at the traditional world, don't quote me on the numbers, but I think 85% of all the capital was managed by institutions and 15 by retail. And in crypto, the institutional part was 5, 10, 15%. There were no clear numbers, but it was pretty clear that back in the day, like the retail space was bigger. I think the other thing was also that in the retail space, there were lots of players already. And the third thing is obviously that our capabilities were way more suited to the B2B, to the institutional space. I think the main aspect why we decided for B2B back in the day, and why also I think like, and this gave us or this made the decision also right in the end, is that retail will use blockchain technology very, very differently than B2B will do that. And you see that also today, the number one use case for retail users is trading, and the number two use case is, let's say, cross-border payments, right? So remittance payments is from let's say people who live in the US send money to Mexico or to South America to their families because it's faster, it's cheaper. But what you also see in terms of the trading aspect is that like all the traditional neobanks, the Revolut, Trade Republic, etc., or Robinhood of the world they are eating the crypto retail market because they just integrate crypto into their offering. They have the customers, etc., etc. So I think the interesting growth trajectory has been in B2B, and it continues to be in B2B. Obviously, when you speak to lots of founders, everything takes longer than you hope and then you expect. And then what you put on the pitch deck, maybe it doesn't happen in the next 6 months, but in the next 3 years. So obviously, we also have been dealing a lot with like, okay, institutions have not been coming as fast as we were hoping, especially not in Europe, especially not given that there has been, let's say, quite some, how do I put that? Bear markets and COVID, etc., etc. So like I think the world has seen lots of changes since we started the company. And it's not like this in terms of the growth of institutions or the capital which is coming. But I think like the initial hypothesis is still very, very much true that the use cases for crypto in the B2B space are obviously way bigger than in the B2C space. Yeah.
Okay, and so just like a parenthesis on crypto itself, I mean, if I'm trading like stocks, for example, and I can understand where the intrinsic value lies. I mean, like in the sense that you own a share of something which is business generating dividends, etc. I can understand where the value comes from. Maybe, reflecting on this ICO crazy period and, and then now what the conclusions could be. I mean, what do you see in terms of intrinsic value with crypto, in the sense that it's not backed by any sort of tangible goods or tangible assets?
Yeah, very good question. And I think you're hitting the point very well. I think the last 12, 24 months, we really have seen a change in what crypto projects gain traction and which are basically being left behind. As you mentioned, like you had lots of new projects coming out in 2017. You had lots of new projects coming out in 2020, 2021. And if we are fairly honest, 95, 98, whatever the right number is, of these projects do not have any inherent value. Lots of them, though, were fueled by the cheap money which was there and like the greed of people because they heard their neighbor got rich with a meme coin. So I also invest into a meme coin, right? What you have been seeing in the last 24 months, I would say, is that the valuation framework, how people look at, let's say, blockchain tokens, crypto tokens, has completely changed. And we are now going more and more, and we're still not there, but for quite a number of different tokens, blockchains, we are going to valuation frameworks which look way closer to how you would evaluate like a traditional company. And in the end, you have different, let's say, valuation metrics, right? So starting with the most prominent one, Bitcoin, there is no valuation framework you can put. It's like a store of value. It's the same as gold, except the industrial use case, but it's like a store of value. It's a hedge against inflation, but there is no underlying, let's say, revenue generation. But then you have lots of protocols, and they are called like so-called utility tokens, right? So Ethereum is one, Solana is one, where you can really see how much of, let's say, traffic is running on the blockchain. And it's more complicated than I'm explaining it, but how much, let's say, fees are the protocols generating, and the fees can be seen as a revenue. And based on that, you can start to say like, okay, if they would burn X amount of fees, if they would make X amount of revenue, this could be a fair valuation. And then you have a third section, I think, which is like if you're in the crypto space, the most, let's say, or the mostly talked about, if we talk about like real valuation metrics, you have applications like Hyperliquid, which is like a DeFi application where you really see how much protocol revenue it makes on a daily basis, on a weekly basis, on a monthly basis. And based on that, like you can say, okay, the whole project might be worth X and there's so many tokens and that gives you like to a token price. That being said, this is the vast minority of all crypto projects which are out there.
Mm-hmm.
But it's pretty clear that those ones who don't have an economic model, that they will not survive forever. And there is lots of, we call them dead protocols, like dead tokens, which are still existing, but which are not being used and where the value has gone down from $30 to 1 cent over the last 5 years.
Mm-hmm.
In that sense, I heard that from a VC investor lately, who put that quite nicely. It's not different than traditional startups, right? Because like 90, whatever, 5% of all startups also go out of business over a time of 5 to 7 years. Crypto projects and crypto tokens do the same. The very, very big difference, though, is since crypto projects have a token, it's visible. And since you can't put like a token into an insolvency process, and as long as there's one person who is running a node, these projects, these blockchains can continue to live, and they always show up with like a fraction of a cent in price, right? And I think this is also why it's so prominent that there's like that the tokens are crashing so much. But I'm not building this up as an excuse. But from a certain context, it's also very similar how startups work. But startups just like they vanish. The tokens
Yeah.
don't
So,
vanish;
so,
they
so,
live
so
forever.
they never go bust entirely.
Exactly.
Good thing. So, I mean, when you started the company, I mean, you said it yourself, like you were two business people. From, I mean, my point of view, but I mean, one would think that it's also you mentioned it's a very technical space, and I wouldn't even know how to start, yeah, a token or even like any sort of business in the crypto world. But now, how did you do it essentially to understand like the technicalities of it? And maybe, I mean, maybe not for Finoa per se, but how much does it cost? I mean, you mentioned like there's a similarity with the startup world. How much does it cost, I mean, to start like a new token, for example? And yeah, I mean, a few questions in one, like really, like, so how do you, like, how much does it cost roughly, like, to finance the launch of a new token? And for you as a team, how did you make it through the technical hurdle?
Yeah. Yeah. I mean, maybe to clarify, so we never launched a token, and
No,
Finoa
yeah,
doesn't
no,
doesn't
it was just
have a
like, yeah, it's
token.
a curiosity.
I mean, back in the day, it was quite expensive, right? So I think you could easily have spent 500,000 on doing that. Back in the day, though, the majority of the costs would have gone for legal and regulatory costs. That has gone down tremendously since then, right? So I think today you can launch a token. Like there's like they call it so-called launch pads, token launch pads, like pump.fun is one for those who are interested to look this up, where everybody in the world can basically create a token. Yes, there's some legal risk to it, there's some regulatory risk to it, but back in the day it was like quite expensive because it cost lots of money. Nowadays, this is way easier. For us at Finoa, as you said, I mean, we were not technical. We obviously, I would say, learned as much as we could from a technical perspective, but we didn't become software developers, right? So this was before AI, if people can still remember that. But it was like we needed to dig in, we needed to understand. And I think the core value which we were able to bring is, let's say, trying to work with developers and trying to understand who is a good developer and who is not a good developer, right? And we were quite lucky that we found yeah, we found like two things which helped us quite a lot. We found like a very, very strong developer who then also joined us to become our first seed after like 6, 7 months. And then we found a company which was very experienced with cryptography and traditional banking services. And we, in the beginning, leveraged them until we started to hire our own team. But again, like the main value we were acting kind of the product as the product people who worked together with the technical people, with the developers. But it was obviously to the outside. And if we come to fundraising, we started to fundraise in 2019 in Germany.
Mm-hmm.
Two business people, as you said, very technical area. Crypto was not, let's say, as hyped as it was in 2021, and people didn't really understand it. So we needed quite some time to convince investors for the seed round. And I think we got like the typical story, like I think more than 100 rejections or so until we had like the round basically closed. And then closed that basically in December 2019.
How much did you raise at the time?
So it was, I think it was 2.25 million euros. So roughly, let's say
When you
2.5
start
million.
forgetting the amount, it means you've raised.
Yeah. No, I think it was the right amount. We started the project in 2018. We got first time money into December 2019. Time in between, we basically bootstrapped that. So put lots of our savings in there. Also had to sell, quite some amount of crypto, which we were holding privately, basically to finance that. Maybe like a funny but also sad anecdote. I reviewed that once like whatever, 23 or so, and I really had like where I sold 100 Ethereum for like 100 euros or so, right? They are now worth $2,000. So w- there's lots of crypto people who tell you like the biggest mistake they did is like selling their crypto early on. But that was like back in the day. We built a company from it. We benefited from it in other ways.
I mean, you didn't know either. I mean, it's always easy to look at the past and say, I should have done that. I mean, if I'm trying not to do this, otherwise I'll probably like hang myself.
Yeah.
Like thinking about everything I should have done and not do and do. No, okay, man. So yeah, in terms of so financing journey, so you raised like a seed round, but then I mean you also raised like a larger one, like if
Yeah,
I'm not
so
mistaken.
we raised the seed round in 2019. We had, I think, very early success in 2020. We then went out for our Series A in January, February 2021, and I think this is the larger round you were referring to, where we raised in total I think 18.7 million euros. So I think we announced it like as $21 million back in the day. That was led by Balderton Capital, like the VC fund from London, and that was also at a time where like crypto valuations were high, VC valuations or startup valuations were very high. We were profitable back in the day. So in 2021, just to give you a feeling, we made like roughly 4.5 or 5 million in net profit, which was like year 3 of our existence.
It's quite a
But
lot
that is
for.
like that is also unfortunately still the best year which we had since then, if we take a look at the net profit, right? But I think like we missed then to raise for the Series B in end of 2021. We I think missed that window in retrospect, and then I think like December 21, I think it's all started to fall apart, not at Finoa, but basically in the market. I think like people recognize that paying a 40-50x on a 12-month forward ARR is not so sustainable. And we missed that window. We until then or from then did not do like a proper Series B, but we did 2 times like an extension strategic round, however you want to call it. I think like from business perspective, it was a strategic round. So 23/beginning of 4, we added a couple of crypto native VCs, of which the majority were also our customers. And by that, basically, we increased our, let's say, business development reach.
Mm.
What we always figured out is that our investors, especially if they are crypto investors, they are a huge ambassador in bringing us new customers, new projects, etc. So it was a small amount, but like an impactful amount. So they brought us way more revenue than they invested. I think that is
Yeah.
like the thing fair to say. And then beginning of last year, we did, this is not public, but I can share as much as I do. We did like another strategic round with a very large international bank, which also wants to move into the space at the moment, financed through, but obviously also taking a look at raising like a Series B over the course of this year, beginning of next year.
Okay, understood. And so looking back, I mean, you said like the business was profitable with net profit, which were quite high. I mean, particularly when, I mean, you don't have so much dilution. I mean, you're still like full master on board. I mean, looking back, I mean, do you think that was, I mean, it's a bit of a tricky question. Do you think it was absolutely necessary or because, I mean, maybe it is because you had to spend like much more money, but I would imagine myself in a business like turning, 4 million in profit a year with a friend of mine. I'll probably tell myself, why don't we remain like this for the next 2-3 years? We don't become like immensely rich, but I mean, you still get some money out of it. I mean, you're not going to retire in the Maldives with a mega yacht, but still, you can probably take a few months off to drink margaritas on a beach in Mexico. Do you think that was like absolute? I mean, maybe it's because you also wanted like more risk, etc. But based on what you just described, I mean, for myself, I mean, I don't know. I will wonder.
Uh, I think the key thing to consider is that lots of our revenues back in the day were very dependent on the crypto prices, right? So they were, let's say 95% dependent on the crypto prices. And the moment the market crashed, we also had we saw this impact quite heavily on our revenue side of things. It didn't crash by 95% because we knew from the beginning that we need to build like more stable, more
Mm,
sustainable revenues than just like hoping that the crypto market increases in value. But back in the day, it was still very, very dependent on that. I think the other thing, obviously, is that, I mean, we are first time founders. We were VC backed. VCs were telling you back in the day, okay, spend the money, grow faster, etc., etc. Not blaming our VCs in particular, but like that was like the common mantra back in the day. And yeah, we did we did like the mistake to follow that advice to a certain degree. We reacted very early and let's say corrected the mistakes which we did, but we really grew the company. Like in the year where we were profitable, I think we were 35, 45 people, something around that. And then within a year, we grew that to in total 130, including like lots of freelancers. 2021 was the year where everybody could, let's say, write their salary on a piece of paper, and some stupid company around the world would have paid that, right? So there was like so much free VC money that we also overpaid people. So we had too many people, and people most probably earned too much. And we corrected that very early on in 2022, and downsized the company very quickly again.
okay.
And that was also like the thing done right, because otherwise, most probably, I would not be sitting here as the CEO of Finoa anymore. Um, because like yeah, we were building up the workforce instead of automating, building the processes, etc., etc. So the common mistakes which lots of other founders, startups did as well.
Do you think it's do you think it's quite linked to the fact that you raise quite a lot of money? So, as you said, they may not tell you directly spend the money, but I mean you understand that you get some money which you need to put at work, and maybe like the first, I mean, easy spend is to say we are going to double down on the sales team because we are going to double sales like this. Then we are going to double down on the tech team, so we are going to develop twice as many features, etc. I mean, do you think that's linked to the fact that you receive money? And if you had been bootstrapped, I mean, you would have been probably a bit more conscious on, who you hire, who you don't hire, etc.
I mean, for sure, the VC money helped, and for sure also the fact that VCs were throwing around with the money helped. I think in our particular place is we also saw the customer demand from the outside, right? So we didn't increase the team size because we wanted to do more. Of course, we wanted to do more, but we also had the clear demand from customers. And the mistake which we did is instead of like one example, instead of automating customer support, we just hired customer support people. And instead of improving our, let's say, developer platform so that developers can ship new features easier, we hired more developers, right? I think we tried to solve the growth problems and the growth pains with people instead of processes and automation. And that one we corrected then quite heavily and have been focusing a lot on process optimization, automation, etc., etc. And I mean, then like in the age of AI, I think this has become even more important and even easier. So to give you a feeling, we are right now a little bit more over 50 people, and we get way more done than we used to be when we were like 120, right? So there was the customer demand. Yes, there was also the VC money. And then obviously your investors tell you, okay, go after this customer demand and do whatever you need to do. And the wrong decision was like, okay, we wanted to be fast, but it became chaotic and unsustainable,
Yeah.
especially when the market crashed down. Yeah. Because then
Mm,
that
yeah.
demand died from one day to the other. That demand died or was worth way less, right? So a token which was worth 30 euros then only was worth 5 euros. And the VC money also died out. And I think that basically was yeah, the difficult situation to manage. So we need also to get the costs down. Yeah.
Mm. So regarding AI, so you're mentioning AI like doing more. I'm wondering if, well, I mean, AI is great because, I mean, you can do much more. But yeah, I'm wondering if for companies, it's not, I mean, there is a, let's say, thing where you think, okay, it's replacing people, but at the same time, it's a good catalyst to force yourself to think about a process, more than, hiring more people to do more. Because, I mean, if you want to involve a robot, I mean, as much as, they can do a lot of different things now, like autonomously, I mean, it's still a robot, so you need to include it in a specific process and assign specific tasks, etc. So, yeah, I'm just wondering, like, yeah, maybe it's a good thing for businesses because it forces you to think process first and then addition of resources later. I don't know if you agree or not with this, but
No, fully agree. I think there's like we look at it from two perspectives, right? So I mean, one part is the process, really, where you say previously I needed 10 people to complete that process. Nowadays, 8 of the steps can be done by an agent. So I maybe only need 2 people, but if the process sucks, like the agent will also not be able to complete the process as good as they should be. I think that's number one. It forces really companies to think what is necessary, what is needed, and how should it go. Because obviously the big problem is if you build the wrong processes and put agents on the processes, it might also be like, yes, it might be better than putting people on bad processes, but it's still not necessarily very good. The other big thing where we are focusing our time on is on what we call AI teammates, where we say everybody in the company on the long run, right? We are early in that process, has an AI teammate or an assistant, however you want to call them, who helps them with daily stuff. And I think this is a big time saver for lots of people, including myself, where I just say, okay, like things which I previously would have delegated to a human being or things which I would have done by myself, right? So, very simple example, you need to, uh, let's say, write hundreds of emails and each email needs to have like an invite code or so and a different name. You nowadays put that into Claude Cowork and it does it like in a copy paste format and it can put it into your drafts, etc., etc. So there's like this personal efficiency gain, which is also very important. And if you then take a look at like how many or how much time, let's put it like this, is spent on things which are manual work, which are not value adding, which just take long, which you give to a junior because they like you don't want to do it by yourself. You need to explain it to a junior. I think this is also the very, very big lever for us. And then we open up the whole conversation about AI in coding. I think there's like very different opinions on that. Again, I'm not a software developer, but for simple tasks, it is just like so much faster and so much cheaper than like a developer. Yeah,
Particularly for designing like simple applications. I mean, I mean, I'm not a software developer either, but I mean, I've created like a few applications already, like with Cloud Code, which are essentially saving me like 15 hours worth of tasks a week, which is absolutely insane.
yeah, and for a company of our size, right? So we have started to rebuild lots of our SaaS tools, being fairly honest, and not necessarily because like it's so much cheaper. Yeah, we also save lots of costs by not running on whatever things like Atlassian, Jira, but it also helps us to build the processes which are very good for us. So like, we used to be a regulated company in Germany, very enterprise-like in the way how we thought about things. So you obviously had like enterprise-grade tools. But the smaller the company gets, the more automated the company gets. Also, you don't want to, let's say, rely on those big enterprises where the tool is maybe not that flexible, right? And I think things like ticketing desks, you can easily rebuild within a couple of days if you include like security testing, etc. And the big decision which you need to make is like, is this an internal app versus an external app? And what's like the criticality of that app? Are we okay if this app is not online for a couple of hours, or is this an absolute nightmare because customers will be complaining? And then you can obviously take way more risks if it's like an internal note-taking app or a Kanban board app, if you would build something like that. Because if this is down for an hour until it's basically fixed again, like nobody will die, right? No customer will feed that.
Complain. Yeah.
Obviously, everything which is like going to the outside, we also leverage AI very highly, but I think the security, the governance constraints are way higher.
And so maybe coming back a bit more to Finoa, I mean, what is Finoa today? So, I mean, we grasp a bit of, bits here and there, but today, yeah, what is it really? If you can spend like maybe 2 minutes to essentially describe what you guys are, doing and who you are serving in what form, etc. And maybe like what is the sort of vision or next step for the next few years, that would be quite helpful.
Yeah, yeah, very happy to dive a little bit into that. So I think from the founding story, you figured out already, we initially started as a custodian serving institutional and professional investors in the crypto space, right? And these can be um, asset managers, family offices, hedge funds, venture capital funds. So I would put it more into the alternative investor section. That was our first type of customer group. And if I say custodian, it's not just that we only offered custody, so aka the safeguarding of the private keys and the crypto assets, but over the time, we obviously build a couple of different products on top of it, which customers expect from your, let's say, let's call it broker or custodian, like staking, which has been and continues to be a very, very important revenue factor for us, where basically people can put their assets to work. They receive like a staking reward, which is similar to an interest or to yield
So
interest.
just on that note, because I discovered that when I prepared for our chat. So and you let me know if I understood correctly. So staking in a very simple term is a bit like putting some assets in escrow as
Exactly.
collateral for an operations in the blockchain. And for that, I will be rewarded with interest, fees, coupon, whatever you want to call it. But the idea is there. So you put some assets as collateral and you get paid for that.
Exactly, yeah. So you put it from a technical perspective, basically you delegate your assets to a staking validator, and with that one, you enable the validator slash the blockchain to confirm and execute transactions which are happening on the blockchain, and therefore you get like a reward. And that reward, like in financial terms, it's not interest from a legal perspective, but it feels a little bit like an interest which you get like on your money in a traditional banking account. So that is it's a product. Obviously, if you have lots of customers with high volumes, which we had, they wanted to receive like a yield, earn a yield on that. So staking has always been very attractive for us. We also had a brokerage product where people could basically buy and sell crypto, and a couple of other, let's say, blockchain infrastructure, say services where we have been running nodes for certain blockchain protocols, etc., etc. What we have been seeing in the last, again, 2 years, and where we are currently undergoing quite a change, is that we have been switching away from focusing on the crypto investor who primarily, as said, invests to make a return, to redeem money to their shareholders or to their limited partners if it's like a fund, and have been moving and very aggressively move since the last couple of months into what we call like an on-chain neobanking direction. Because what we have seen, and we also have seen that in terms of customer demand and how customers are using our products, is that crypto is not only an asset class anymore, but blockchain technology is really slowly but surely underpinning financial services technologies, right?
Mm-hmm.
There's plenty of trends which we are all talking about since 2017, 2018, stablecoin payments, tokenization, etc., etc. And you really see that lots of them are on at the inflection point. I think already 2024, even more in 2025, stablecoin transaction volumes have surpassed Visa, MasterCard, and American Express. Quick disclaimer, yes, lots of the stablecoin transactions are still between crypto exchanges and market makers, so there's a relation to the trading aspect, but you see that the payment aspect of stablecoins is just like going through the roof.
Mm-hmm.
Tokenization is something which everybody's talking about since 7, 8 years. 24, 25, you really have been seeing like the growth of it, right? So we're moving away from a simple POC. So and you see players like BlackRock tokenizing, Franklin Templeton tokenizing, etc., etc. And you really see that the trend of crypto becoming a technology which is slowly but surely replacing traditional financial technology is
Mm-hmm.
significantly increasing. And what we are then saying is, okay, we continue to focus also on the use cases which crypto brings beyond just pure investing, which are payment for companies, which are on-ramping, off-ramp, so the connection to the traditional financial world, etc., etc. And yes, we are with our, let's say, Western European US point of view, we see like maybe we don't need, let's say, crypto being like, or let's say on-chain banking. But if you then take a look like in areas outside of Europe, outside of the US, there is a huge demand, right? So you see companies who are holding their treasury completely in crypto, stable coins in that sense, right? So the USDC, USDT, you see that payments, salary payments are happening in stable coins. you
And so
see that
this, like in terms of volumes, if you can give, do you have some numbers just to grasp a bit like the sort of trend? Because personally speaking, I don't know many people getting paid in crypto, so I mean, I'm probably not in the right world for this. But I mean, do you have any sort of metrics on how much? What the volume of, what you mentioned, salary payments? I mean, what's the sort of volume of this?
yeah. I mean, I think having the exact numbers is quite difficult, right? I think there's a nice, and I can look it up in a second. There's a nice comparison, basically, like the stablecoin transaction volume versus Visa, MasterCard, and American Express. And you really see that in 2024, 2025, there have been more stablecoin volumes transacted globally than there have been money moved via the Visa network, right? So
Yeah,
this
wow.
is really, it's not just a small space, but it's really something which is big and which is also very, very much growing. And I think to your point, you don't know people who are getting paid in stablecoin. That's exactly true, right? So this is like, there is no need in the European Union with a SEPA instant payment or with a SEPA network in general to pay in crypto. But take the example of a company which is sitting, let's say, in the UK, but
Hmm.
it's a remote company, it's an AI company, it has people all around the globe. And just managing the payroll and sending money all around the world, yes, you most probably use players like Deal, who are, for example, using stablecoin payment rails already to manage
Oh,
their
really?
financial operation. They do, yeah. So there's lots of companies who already are using that, like platform economies. You have lots of companies like Shopify has integrated that you can pay with stablecoins, right? And most of the time it's somewhere in the back that the user doesn't really feel it. But there's a good company in Lithuania where we also have an office which is called like NordVPN, right? Simple VPN provider, not simple, it's a good VPN provider, but like they have customers all around the world. And now just
Mm-hmm.
imagine the person from Australia wants to buy the NordVPN product. For them, sending it in stable coins is so much easier because it takes a couple of seconds, minutes until it's there. And it costs like 10, 15, 20 bips. Compared to if you send this via the traditional rails, it takes 5 days. Yes, the user will not necessarily see that it takes 5 days, but the costs for NordVPN are way higher if they would accept Australian dollars than if they could accept stablecoins. And you see that in the back, especially in the commerce, there is lots of stuff happening. The big catalyst here is obviously, and that's also what's baked into our vision, into our strategy,
Mm-hmm.
is that I'm a firm believer that agents are also taking a very important role in the economy. And if you compare the needs, what agent needs in terms of financial system versus what the traditional financial rails are able to offer, there is no way that agents will not choose on-chain crypto rails as their preferred rails, right? So to give you like a couple of examples, agents want to work automated in real time. The traditional financial system is 5 days a week, built for office hours. It's built on manual approvals, etc., etc.
Mm-hmm.
It's very different across different jurisdictions. So banking in the US works differently than in Europe and Asia. Basically, every country or let's say economic zone has like a different banking rails. Agents will not be able to bank on the traditional financial infrastructure. And then you go and see like what is crypto and how does crypto fit in there, right? So crypto, it's global, it's everywhere the same, it's fast, it's cheap, and it's very, very, let's say, tech first, technology driven, which is exactly what agents are looking for, right? So if we
It's
say, right,
interesting. Essentially, yeah, like the vision is to be almost, I mean, if I understood correctly, the B2B kind of bank for essentially companies that have like some sort of international payment obligations. So either you have a few people outside or you have clients outside your home country, and this is what you want to become in the end.
Yeah, I think like what we are building, to put that in one sentence, is we are building an on-chain platform, banking platform, um, for a new wave of institutions and corporations which are either already in the crypto environment, aka accepting payments and stable coins, or which are being newly founded. And we build this with an agentic mindset first, because we firmly believe that those companies which are international AI technology driven, they will also be the first ones who will deploy agents on a larger scale. And that also like makes us more, let's say, from a revenue perspective, from business model, more like a banking revenue player,
Mm-hmm.
instead of just getting like custody fees and staking fees and trading fees, etc.
Okay, so it's a lot about moving into the payment world, essentially.
Payment and treasury.
Okay, no, super interesting. No, super interesting. I mean, there is like that company. I mean, I'm sure you know Airwallex, which is, I guess it's not doing this exactly, but I mean, they are like the angle is very much about like being able to pay
Yeah,
and record like transactions from all over the globe very easily, initiate payments to someone based, I don't know, in India or Pakistan in very quickly. I mean, I don't know what are like the infrastructure behind that, but it sounds like it's the same sort of pain point, except you're leveraging crypto to do so rather than more traditional banking systems. No, super interesting. So yeah, so you said you wanted to essentially go after another fundraise within the next like 18 months. What would it be for? Like you need to double up on double down on sales.
yeah. I think it's like it will be for sales, so go to market, and it will obviously also go into product, right? I mean, as said, we are a small, lean, efficient, and AI-driven team, but I think you can take a look at this from 2 points of view, right? So you don't need to have that many people anymore to build the same product. But on the other hand, I think if you have an AI first mindset, if you have people who know how to build with AI, you can be way more productive and you can be way faster, right? So we will not raise money to increase the company to 200, but we will selectively add people which will make us faster with AI, like how to apply AI to grow or further, right?
Mm-hmm.
So one point also, like common thought in the industry is like, yeah, you need to cut developers because Claude Code will do their job. The other one is you hire lots of recent credits in computer science, AI, software development. Yeah, my brother-in-law, he's still in university, so he studies AI software development, right? So if he hits the workforce and he knows how to code with Claude Code in 2, 3 years, which is then even better, he will for sure be more productive than a senior developer who is not living in the AI age, right? So we will increase the team to have the short answer also on the tech side of things. But then it's also a go-to market. And I think what's also very important, like one other hypothesis belief of us is that even in an agentic world, you need to have regulated financial platforms. So obviously it's also about expanding our regulatory footprint. Yeah.
Regarding this, I mean, how painful it is. And I've never did anything related to administration. I mean, like, but I mean, my character makes it difficult for me to imagine spending months and years dealing with, I don't know, like the administration. I mean, I'm getting tired just thinking about it. I mean, how much, what sort of the part you dedicate to that in your not daily routine, but how like heavy it is, really.
Yeah. Um, It can be very, very painful, right? So I think we have learned a lot over the last years. And I think one learning, which I think is important for every fintech founder who wants to go into regulation, is I think it's really important to understand like what's the what's need for regulation, because it will hold you back, it will make you slower. And I think you need to have a very strong business case to enable regulation, because it will be lots of costs, lots of time spent, etc., etc. And you should only do it if your customers absolutely need it. That's number one. Then you should also make sure that you choose the right regulatory environment. So in our case, for example, not to go too much into detail on that, the vast majority of our customers have been non-European Union customers,
Mm-hmm.
alternative investment funds, right? So they don't sit in the European Union usually, even if the team is based in Europe. And we have been regulated in the European Union, which doesn't make lots of sense. So in that aspect, we also have changed our regulatory strategy down the road, right? So you need to be where your customer is, and or you need to be somewhere where it's business friendly, where it's technology friendly,
Mm-hmm.
and where you can serve global customers from it.
Okay, understood. So you essentially saying that you spend a lot of time with regulators when it was not absolutely needed.
Exactly.
And just to have a sense of how much it cost, I mean, how much does it cost, like roughly to just the regulatory aspect of it, like on an annual basis, for you, like, I don't know if you can share those sort of numbers, but yeah, legal fees, I'm
Uh,
sure, and sort of licenses, etc. I mean, taxes, I'm sure.
I mean, we have been regulated, or we were regulated in Germany, right? So we don't have the license anymore. But I mean, it fluctuates over the years. But I think like definitely 3 to 4 million in terms of if you have the total costs. And that's not including the time which it takes away from departments which are not directly working in that area, right? So it's obviously lots of people, because like if you are regulated, you have the requirement to have certain positions filled, like anti-money laundering, compliance, internal audit, risk management, and you need to have for all these, let's say, roles, 1 or 2 people. So there's quite a number of, let's say, people which you just need to have, right? And we're not talking like 3 or 4, we're talking like 15, at least 15 up to 25. That's number one. Number two is obviously you have lots of requirements if it comes to which which vendors you can work with, right? So you need special contracts with AWS. You can't just sign their normal terms of services. So you have quite a, let's say, an addition of people who are not directly working in regulatory teams, but maybe in procurement or outsourcing. And they are being busy with trying to implement the regulatory requirements. Same for the tech side of things. So it's difficult to quantify to an exact, but it's easily like 3 4 million, which was 30% of our total cost base. It doesn't bring if that doesn't bring you these 3 to 4 million of revenue, it's not a really sustainable business model, right? So I think that's like very simple to understand.
It makes complete sense. Maybe to essentially wrap up our chat, I mean, you spent obviously a few years building your company. I mean, we discussed at the beginning, yeah, like it's we said like it was quite easy, like to essentially look at the past, but um, present time, what are maybe the key lessons you've learned, over your entrepreneurial journey, maybe in terms of I mean, you mentioned that you've hired a lot at some point, maybe making some sort of a mistake, which you fixed afterwards. Regulation, or maybe because it's changing because of the portfolio of clients you have now. So, I mean, it might not have been a mistake. It's more like, okay, that today is not our business case anymore, so we need to essentially move on. Based on everything you just described and maybe other things you haven't described, I mean, what are like maybe the key lessons you learned today, which you hope you knew before?
I mean, maybe one let's say, thing which I underestimated is it continues to be a roller coaster no matter how long you are in, right? So it's not that like you are in for 5 years and you have a big management team and like things run smooth and you can take a couple of steps back, right? So um, I think like being a founder, continuing as a CEO, it's a very intense job. And the whole company always looks up to you and looks like, okay, what's his mood today? Like, how energized is he? And that obviously, like sharing that here can be exhausting at times. And there were times like in in bear markets where that was also, let's say, difficult, in like 22, 23. Mm, So we worked a lot on that. Also with a coach, I worked a lot on that. But that's also what makes it so exciting, right? So, um, like looking back at the journey, there is so much stuff which has been changing around me, and the constant, let's say, the constant need for change, for evolving. I think this is also what gives back a lot. People always say you learn so much, you learn so much. And I'm not looking at what I'm learning, but I'm really also enjoying it. Obviously, there's good times, there's not so good times, but let's say either you do it fully or you don't do it at all, right? And I think that's very important, and that's why you see lots of founders doing that for whatever 10, 15 years, and they are still happy because they embrace that change, they embrace that evolution. But then you also see people who after 3, 4 years say like, okay, like I can't do this anymore because this is too much, and then they start a new business, right? So it's yeah, it stays exciting on a day by day basis, exactly like people tell you, and especially like in times like, look, we had COVID, we have geopolitical conflicts all the time. Crypto is volatile to everything. Now we have like an AI wave. So there's so much stuff around us happening, which obviously like influence the business. And I think that's also what keeps me going on a day by day basis and not say like, yeah, okay, I can take a couple of steps back, which also most probably would not then work because the company will feel that and the company will react to that. Yeah.
So bottom line, you are happy and you don't regret leaving McKinsey and a well-paid path and maybe more secure path.
Yeah, I would have worked, I think, in terms of hours, I would have worked most probably even more at McKinsey, right? Like, maybe not, maybe the same, but I think this year gives like way more purpose. And yes, it's the riskier part, but I think it's also the way more interesting part. Not gonna say that McKinsey, becoming a partner, senior partner is not an interesting job, but it's like completely different feeling.
Yeah, of course. But look, Christopher, thank you so much for your time. It was a pleasure to learn a bit more about crypto and what you have in stock for the future. I mean, I truly hope all the best for you and the company, hoping that the roller coaster is going up and up and up with less downs. Thank
Right.
you.
Thanks a lot. Likewise.